I wanted your thoughts on Affle India because the numbers have been very strong. So, Prakash, I'll come to you in a bit. We have the management joining in now. The company reported a strong revenue growth of 15% quarter-on-quarter, while the international revenue contribution also surged to 73%. Anuj Khanna Sohum, the founder, chairman and CEO of Affle India, joins us now to discuss their Q3 performance. Anuj, hi, good morning, and thanks as always for being with us on CNBC TV18. Well, the revenue growth year on year has been pretty strong. It's higher than the growth rates that you've seen in the preceding few quarters. Can you tell us what is the trajectory that you're looking at as we move along? What could be the average growth that Affle India kicks in by the end of, say, FY24 and then FY25?
Well, thank you for having me on your show. Good morning. Yes, we did really well in the last quarter, and I would like to say that 2023 was a very challenging year for us, in which we were able to provide a very transparent action plan on how we will turn around the company. So yes, the preceding quarters did not deliver as high a growth that we are used to, primarily because of developed markets and certain challenges that we had to overcome. But I am glad to say that we have ended 2023 in the strongest way possible. And our financial balance sheet is stronger than ever before. Our intellectual balance sheet is stronger than ever before with the patents in Gen AI, 15 of them filed last quarter. Looking forward, I think what would be reasonable and practical is to look at around 20% consistent top line, bottom line growth with incremental margin expansion, because our company is really anchoring itself strongly on premium consumer platform conversions, delivering premium ROIs, therefore hoping that we can command premium pricing and better margins as we go along. So, that's the direction that we are going in. And I think we are in a very strong driving position.
Okay, so you're saying 20% growth is what you're looking at going forward on an average. But I want to understand a little bit about the international business, because last time you had said that the international business is a bit subdued because of, client spends reducing in places like US, Europe, etc. Have you seen any kind of recovery over there?
What I said to all our shareholders in Q1 in this financial year, it was in fact May 12th, if I remember correctly, that we have had internal issues in the organization in developed markets for which we took decisive, timely actions, and we were very transparent about those actions being taken, where I took direct leadership on ground together with Anuj Kumar and our top management to go and fix things in the developed markets. And we gave ourselves a timeline to fix it by December 2023, and I'm glad that we were able to deliver on that promise. So our issues were more internal. But yes, from an external market outlook perspective, because our base is small, in developed markets, the addressable market is huge. Our products and business models are compelling. So given that the base is small, we can still extract good growth in that market. And we're seeing good potential for us.
Okay, body language as well is far better, I think, in comparison to what we spoke last time. Anuj, so you're sounding far more confident. A couple of questions. Out of the revenues that you delivered, you had done that acquisition, UAP. What was the contribution in the past quarter, if you could tell us in revenue terms?
I would say that, UAP acquisition has been a very successful integration. And unlike the earlier acquisitions, UAP was already in single-digit profits when we bought the company, and we have been able to inch that upwards consistently. And unlike our previous thesis, where we would take 3 years to integrate, we have managed to do the integration within 9 months very successfully. What I would like to just mention is that we are still calibrating UAP upwards in terms of profitability, while in terms of integration of revenue, we saw over 10 to 15% sequential growth overall together with UAP. Because last quarter also we had UAP, and this quarter we also had it combined. So if you compare, I think in terms of revenue growth, we are doing really well. 15 to 16% is very phenomenal. But even on profitability, we are calibrating
Anuj, in revenue terms, it would be what, 80-85 crores?
I don't have the exact number, but I know in terms of percentage, it is less than or around 15%.
Got it. Okay, all right.
Anuj, just a quick point. In the US, right, we just had numbers from Google. And that's the one company which kind of pointed to advertising revenue growth being a little subdued. Markets were disappointed. Can you talk to us if that's going to be an issue for you in 2024?
Look, I said very clearly, our products are differentiated. Our business model is unique. and it's very, very compelling. So when we go out there and deliver conversions and premium conversions to our advertisers, I think it's very compelling. And we are not looking for, huge budgets. Our base is small and the addressable market is so large that I don't see a challenge in terms of at least getting our fair share of those budgets in those markets. I mean, Google is really not a comparison or Meta. I mean, these are companies which are much large bases. They're very anchored in developed markets. So, I think it's not a fair comparison to take any indicators from there.
Got it. Okay, just some quick numbers. Earlier, you said you would cross 1,800 crores of revenues by the end of FY24. Are you on track to do that? And if yes, what would the guidance be for FY25?
Well, I am not giving specific guidances. Let me just say in April 2024, we complete 18 years as a company. And I hope that when I come on the call next time that we would cross 1,800 crores.
All right. Anuj, you said UAP contributes 15%. I didn't get that. What was the 50? Or it's growing at 15%?
I would say both. The number is about 15% contribution, 85% organic, 15% inorganic. And also that the sequential growth, I think sequential growth is about 10% or so, but 10 to 15% is the range that we are looking at from that lens.
And you also mentioned that, along with the 20% revenue growth that you're looking at, margin expansion as well is something that we could be talking about. Could you tell us what is the ideal margin?
That's our long-term strategy. We are going more premium. So when you go more premium, you work with premium inventories, premium ecosystem touch points, whether with iOS Scan Network or iOS App Store or other OEM app stores. So we are working really consistently, including CTV and going beyond mobile to connected devices. So in these areas, we can command premium pricing, but it will take time. It will require an investment phase. And that investment phase is perhaps what you're seeing. If you see our other expenses has gone up, this is not a negative sign. It shows that we are convincingly investing in sales and marketing efforts, and we will continue to do that.
Got it. All right, Anuj, all the best for the quarters to come. Thanks a lot for joining in and speaking to CNBC TV18 about your earnings. That is the word coming in for Affle India.